Hello there, and welcome to T-Shack's Train the Trainer webinar. We developed this training to help anyone interested in our programs gain the knowledge and the tools they need to help us spread the word about our down payment assistance and mortgage credit certificates across Texas. We also wanted to develop a way for lenders and realtors to be able to build their businesses using our programs. Win-win, right? So today we are excited to equip you with the tools, insights, and confidence you need to effectively present T-Shack's programs in your own communities. This training will walk you through key program details, messaging best practices, and helpful resources so you can clearly communicate the value of our homeownership programs to homebuyers and local partners. Whether you're new to T-Shack or looking for a refresher, this training is designed to make you a knowledgeable and confident ambassador for our programs, and we're so happy you're here. I first want to kick us off by introducing you to the homeownership team here at T-Shack. We are small but mighty. We have first in the picture Frank Duplashan. He is our senior business development specialist. He goes out and does a lot of presentations and trains realtors and builds relationships to help spread the word about T-Shack's homeownership programs. Then we have Kayla Gillespie. She's our homeownership coordinator. She is our powerhouse behind the scenes and helps us coordinate and schedule and do all of those things that need to happen in order to make our business successful. Then we have myself, Sarah Eleanor. I'm the Senior Manager of Homeownership Programs. And last but not least, we have Danielle Levesque. She's our Senior Director of Single Family Programs. So to tell you a little bit about me, Sarah Eleanor, I have been here at T-Shack for 13 years. I have been in affordable housing since I started my career. I started my career working for Habitat for Humanity, and that's where I really fell in love with the idea of affordable home ownership and the impact that it can have on families, and truly realizing that owning a home is like a launching pad for everyone that lives in that home. The stability it provides really allows everyone in that home to reach their full potential. So I have just stayed in homeownership in all different realms and facets since I graduated from college. But like I said, I have been here at T-Shack for 13 years. I just celebrated that anniversary in December of 2025. So you will hear from each of us throughout this presentation today. And so you will get to know everyone's voice, and everyone will be presenting their knowledge and their particular topics throughout the presentation today. As a whole, the homeownership team, we do a lot for the state of Texas. We provide training to lenders and realtors, both virtually and in person. We guide home buyers to professionals like yourselves, realtors and lenders alike, and housing counselors in order to help them along their homeownership journey and hopefully help them use our programs to buy a home. We also create lots of educational resources, much like this webinar today. But over the years, we have created numerous resources for home buyers, webinars, flyers, social media videos, all kinds of things. And then we also develop business and marketing strategies. So we do a lot of work to bring people to our website. We want people to get there and get the knowledge that they're looking for to buy a home. And we work with the marketing team to develop strategies to spread the word across the state. But we really do rely a lot on people like yourselves to help us spread the word. So we're again so happy that you're here with us today. So what can you expect from today's training? Our intention is to make it seem as though you are a T-Shack pro after taking today's training. We're wanting to present you a deeper dive on our programs so that you will leave here feeling like you really understand T-Shack and feel confident in presenting this information to your communities. So we really want you to feel like a T-Shack pro after today. You will learn how to use our programs to build a niche business for yourself. So, again, our goal is for you to be able to use our programs to help you build your business. We can help you advertise events. So, if you decide after today that you want to take the presentation slide decks that you'll gain after seeing today's training and go out and make a first time homebuyer presentation to a group of folks, maybe at a local church or a title company or something like that, if you give us enough lead time, we can put that event on our website and we will help you advertise it through our social media accounts, so on and so forth. So keep that in mind. We really do want to help you build your business, and we want to help you help us spread the word. At the end of this presentation, there will be a registration for you to complete, and that will give you access to all these tools that we have developed for you. Mainly PowerPoint slide decks that have scripts on each of the slides so that you know what to say. And we're hoping that you'll take those and be able to run with them. So that is what you can expect from today's training. Here is today's agenda. First, we'll start talking about who TSHAC is, our mission, our vision for those of you that are just being introduced to us, the Texas State Affordable Housing Corporation, or as we fondly refer to ourselves as TSHAC. We will talk about our down payment assistance, our mortgage credit certificates, how someone will qualify. Then we will move into the marketing aspect where we show you some of our flyers and brochures and how to market yourself using those. And then we will dive into a little deeper on the various presentations that will be available to you after taking today's training, some tips on how to make impactful presentations that we've learned over the years, and then also some tricks for building your business using TSHAC. The Texas State Affordable Housing Corporation, or TSHAC as we refer to ourselves, is a true 501c3 nonprofit organization. We were created at the direction of the Texas legislature, and our mission is to facilitate, preserve, and expand affordable housing opportunities for all Texans. And our vision is that all Texans will have a place to call home. We, like I mentioned, we're created at the direction of the Texas legislature, and our board of directors is appointed by the governor. So we do have oversight like any state agency would. However, we do not receive any taxpayer money from the Texas General Fund. So we do a lot of really great things for the state of Texas in the affordable housing sphere without costing taxpayers any money. So I'm always very proud to present that to our audiences. The way that we fulfill our mission and vision is through this concept of build, buy, and stay. So for our build component, we help developers develop and rehabilitate single family and multifamily affordable housing throughout the state. Then we have our buy component where we help homebuyers purchase their homes using our down payment assistance and mortgage credit certificate programs, and that's what we'll be focusing on today. And then we have our state component where we actually bring in training to the state of Texas for housing counselors working for nonprofits or units of local government, providing whether it be homebuyer education classes, foreclosure prevention counseling, financial education, credit counseling, things like that. And we actually bring training to them. We survey them, we see what kind of education they're looking for, and we hire NeighborWorks America to come and provide that training to them. We provide scholarships for them to travel from out of town and stay here in Austin while that training is taking place. And so that's part of our state component. We're trying to educate communities on all those various things. Then we also require anyone using our homebuyer programs to take a homebuyer education class before they close on their home loan. So we want to make sure that they are empowered and educated so that they will be successful homeowners as well. So here at TSHAC, we have two homebuyer programs. One is called the Homes for Texas Heroes Home Loan Program, and the other is called the Home Sweet Texas Home Loan Program. Between the two programs, anyone in the state of Texas that meets our income and credit score criteria can have access to the two assistance types that we have to offer, the down payment assistance and the mortgage credit certificate program. Should they qualify under the Homes for Texas Hero category, they actually get the MCC issued to them without paying the $400 issuance fee. And also, I will mention that the Homes for Texas Heroes Home Loan Program is a great way to target your marketing efforts. So each of these professions gives you an audience that you can market yourself to using these programs. So think about people that you might know in a teaching profession, or a firefighter, or a police officer, or an EMS personnel, veterans. These are all professions that qualify under the Texas Hero category. So a great way to target your marketing efforts. So as I mentioned, under those two programs, the Homes for Texas Heroes Home Loan Program and the Home Sweet Texas Home Loan Program. Two types of assistance are available under both programs, the down payment assistance and the mortgage credit certificate. So really, they're available statewide. Even if you know someone that happens to be moving to the state of Texas, that is fine as long as they plan to buy their primary residence here in Texas. They have access to the DPA and the MCC. So, as promised, we told you that we were going to make you a T-Shack Pro today. So, we're going to give you some insider information that a lot of folks get confused or misstate when they're speaking about down payment assistance programs. In the mortgage business, a lot of folks often refer to down payment assistance as bond programs, but there is a strong difference between bond and non-bond programs. So, I'm going to break it down here for you. So the bond, DPA, and MCC is funded through mortgage revenue bonds. So really the difference between the bond and the non-bond is where the funding comes from. So we have limited funding through our bonding authority that were issued by the state. And we go through the Texas Bond Review Board to issue those bonds and put out bond DPA products. And a lot of times we use those mortgage revenue bonds in our bonding authority for the MCC program. So the bond DPA that we sometimes come out with and the MCC are funded through the same source, mortgage revenue bonds. They do have a little stricter criteria when funded through mortgage revenue bonds, and that means that they are only available for first-time homebuyers. A first-time homebuyer is anyone who hasn't had ownership interest in a primary residence or a home they've lived in, right, in the last 3 years. This first-time homebuyer requirement can be waived if they are a qualified veteran or they are purchasing a home in a targeted area. And you'll hear more about targeted areas in a little bit. Gross household income is also taken into account when determining whether or not they are eligible for our program based on the income limit for their particular county. We look at the household income of anyone that will end up on the deed. Purchase price limits also apply to the bond DPA and MCC, and those are going to vary based on the county where they plan to purchase. Because these two programs are funded through the same source, the MCC can never be combined with a bond DPA or down payment assistance option. So now we move over to the non-bond DPA. So non-bond DPA is funded through a different way, and that's called a TBA or to be announced program. We base our interest rates daily on what the market is doing. So we receive pricing every day, and we go out with different interest rates daily, and they, depend on what the market is bearing that day. We don't run out of funding in this particular category because we premium price the mortgage loan, meaning that we are setting the interest rate on that particular down payment assistance product. And we make a little bit of money on every loan that we originate. And that money goes into funding more down payment assistance in the future. So it's kind of like a revolving fund. So you don't have to worry about the non-bond DPA running out of funding. There is no first-time homebuyer requirement with this particular DPA. And we only look at mortgage loan qualifying income as compared to the county income limit. And purchase price limits do not apply. So what do I mean by mortgage loan qualifying income? We are only looking at what the loan officer, the lender, is using to qualify that person or household or family for that particular mortgage loan. So if there's a non-purchasing spouse involved and they're not counting that spouse's income to qualify for the mortgage, then we wouldn't count it either when determining whether or not they are eligible based on our income limits. Because this is funded through a different source, it can be paired with our MCC program. And the no DPA program that we have, that competitive interest rate product that doesn't come with down payment assistance, is also considered a non-bond type of assistance. So like I mentioned previously, we set the interest rate on the first lien mortgage loan. We do send out rate emails every day to let folks know what the current day's rates are. I would encourage you to sign up for our email updates. We also include any announcements in those emails that we have coming up about programmatic changes or office closures, etc. We also change those rates based on the market. So some days the rates stay the same, some days they change. But again, those email updates that we send out will have all that included. This is what it looks like. It breaks it down by the no DPA options, and then it goes over to the grant DPA levels 2, 3, 4, 5%, and then the 3-year deferred forgivable second lien options as well. So you can see what those rates are for that particular day. If they change for the better, the rate will be in green. If they change for the worse, that it will be in red. If it has stayed the same from day to day, it will be in black. And there is a key at the bottom of the email that explains those color coding options. So let's dive into how down payment assistance works. We have various different options of assistance available. We have 2%, 3%, 4%, and 5% of the loan amount available to help someone with their down payment and or closing costs. These percentages are based on the total loan amount that borrower is receiving. So when we say total loan amount, that means the loan amount including any upfront mortgage insurance premium. And so when you're calculating your DPA or your down payment assistance amount, you are going to calculate that percentage based on the total loan amount, including that mortgage insurance premium. So again, 2%, 3%, 4%, or 5% are the options available to the buyer. If they qualify for all those options, then it's up to them to work with their lender to determine what option is best for them. We do set the interest rate, like I just showed you on our interest rate chart. We set the interest rates on the 30-year fixed mortgage loan, and it is dependent upon the level of down payment assistance that buyer is receiving. So if they are choosing our 2% option, that is going to offer the lowest rate that we have available. And if they're choosing our 5% option, then they would be getting the highest interest rate that we have available. So it's really up to them to determine what options do they qualify for and which option is best for them. Now, the down payment assistance, if it is a non-bond DPA only, there is not a first-time homebuyer requirement on that particular DPA product. And it can be used to cover their down payment and or closing costs or a combination of those two things, whatever they need to put the money toward. We also have a no DPA or 0% option. What this means is we actually have an option that provides a competitive interest rate on a 30-year fixed interest rate mortgage loan. No down payment assistance is attached, but a lot of times the interest rate that we have to offer is something that may even be better than what a borrower can get on the open market through a lender on their own without going through TSHAC. Because we do not add any loan level pricing adjustments to our no DPA interest rate option. And so, therefore, a lot of times borrowers with lower FICO credit scores will oftentimes get a better rate going through TSHAC than they would if they go through a lender and try to get a mortgage loan without down payment assistance through that lender directly. Again, you can combine the mortgage credit certificate or the MCC with any of these options that we just mentioned. Any of the 2 to 3 to 4 to 5% DPA options, as well as this no DPA option. The MCC can be combined with all of them. The down payment assistance can be offered to the borrower in 2 different forms. One is the grant, and the next is the 3-year deferred forgivable second lien. The grant is available on government loans only and is treated like a gift as long as they live there for at least 6 months. The 3-year deferred forgivable second lien is available on government and conventional loans. It's fully forgiven after 3 years of living in the property. That second lien is kind of like a silent second in that it will sit there with no interest accruing and no payments being due during that first 3-year period. So as long as they live there for at least 3 years, then that will get forgiven on the 3rd anniversary of them living in the property. The main difference between these two is obviously the requirements attached to them for repayment, but also that the second lien is likely going to offer a lower interest rate than the grant option. And so it's really up to that buyer to decide what is best for them in their scenario. It's great to have both options because sometimes people only need to live in a property for less than 3 years, but they still want to be owning a home during that, 1 to 2 year period of time. And so the grant would be a great option because they don't have to pay it back if they were to move within that, first initial 3 years. And the 3 year deferred forgivable second lien is great for folks that plan on living there for 3 years or more. So we have options for everyone. To dive a little bit deeper on the 3 year deferred forgivable second lien, because we again are trying to make you all experts on how this works, right? The second lien terms are as follows. So 0% interest is accruing. There is a 3 year term. Maturity occurs on the third anniversary of the date of the note. No monthly payments are due. It's fully forgiven in 3 years from closing, but it is not forgiven on a prorated basis. So, should they have to sell, refinance, or transfer the property to a different owner within that initial 3 years, they will have to pay back the down payment assistance in full. It is not forgiven on a prorated basis every year. So again, like I said, if they fail to occupy the home as their primary residence, if they refinance, if they transfer, or even pay off the loan in full in that initial 3 year period of time, they will have to pay back the down payment assistance in full. And again, a deeper dive to the no DPA product. This is a question we get a lot. There are no recapture strings attached to this no DPA option that doesn't have the down payment assistance attached. There's no assistance attached, and therefore there's no requirements on repayment. There's no 3 year term. There's no 6 month term like the grant. It's just a loan that they are receiving with a better rate, and there's no strings attached. Use our really fun program comparison calculator that we created. It's a great tool to sit there and compare all the different options that we offer to buyers. You can compare the 4% option to the 3% option. You can compare the 4% 3 year deferred forgivable second lien to the 3% grant option. You can compare up to 3 loans at once, and the math is done for you within a matter of seconds. So it's going to show you what the interest rate is on that particular option, how much TSHAC is providing. You can also compare the difference in the additional down payment needed or not. If the amount is in green in this particular example, that means that we are more than covering the down payment, and that's the amount of money you have left over to put towards your closing costs. If the amount is in red, that means that we are not quite covering the entire down payment with the option that you've chosen. So that's the amount you would actually have to come to the table with as additional down payment out of pocket. It will also show you the combined monthly payment with just the principal and interest. We didn't include estimated taxes or homeowners insurance in this, but it does show you what the principal and interest payments would be and how the particular interest rate that you are selecting with the different DPA levels, how that impacts your monthly payment. So these are all great tools to use. We do allow several different types of property when buying a home using our down payment assistance and mortgage credit certificate programs. Of course, the home must be located in Texas, and we really defer to whatever loan type it is that you're using. So, whether that be FHA, USDA, VA, or Fannie or Freddie conventional loan types, we defer to those loan types to determine what kind of property it is that is acceptable. But we do lay it out here for you as well. 2 to 4 unit properties are even acceptable as long as the buyer plans to occupy one of the units. We also accept manufactured homes as a property type, but there are a couple of overlays there. 640 plus credit required for manufactured homes, double wide or greater, not constructed prior to 1994. Also, in addition to that, it does need to be affixed to land. It does need to constitute real property under Texas law. It has to have at least 400 square feet of living space and a minimum width of at least 102 inches. So if manufactured homes are a property type that is popular in your area, those are just some of the overlays that we have in place. Keep in mind that if any of these homes or property types are located in a targeted area, targeted areas are considered economically distressed areas in the state, and those are determined by HUD every year. Certain census tracts have that designation. And those targeted areas actually allow for someone to have a higher income and still qualify to use our program. So, as I mentioned on the previous slide, a targeted area is an economically distressed area. Those areas are determined by HUD, and it's certain census tracts in communities across Texas that have that and receive that designation. We do have a really neat map and lookup tool that you can use where you can actually zoom into your area. The highlighted areas in green are going to be those of economic distress or those that are considered targeted. You can zoom in as far on the map to even see street names and things like that. So, the good thing about a target area, like I mentioned, is that targeted areas offer higher income limits. So, that means that someone using our programs can make more money and still qualify. It also waives that first time homebuyer requirement attached to our mortgage credit certificate program. So, if they are buying in a targeted area, they can make more and still qualify, and they don't have to meet the first time homebuyer requirement. So if you have somebody that is having trouble buying a home, they want to use our program, but maybe they make too much in a non-targeted area, but they meet our targeted area income limits, or maybe they're not a first-time home buyer and they want to use the mortgage credit certificate program. It'd be a great way for a realtor to go in and use this map and zoom in to see if they can find a home that the buyer might be interested in purchasing in those areas so that they can qualify to use our program. Rate buy down options. This is something that we've just introduced recently, and these are both options that can be used with any of our product availability. You can use it with the down payment assistance options as well as the no DPA option with that competitive rate. So, temporary buy downs are where you are buying down the interest rate for a temporary period of time, and permanent buy downs are where you buy down the interest rate for the life of the mortgage loan. For temporary buy downs, we offer a 2-1, a 1-1, and a 1-0. A 2-1 basically means that you are buying down the interest rate 2% in year one, 1% in year two, and then it goes up to the regular interest rate in year three. A 1-1 is where you buy down the interest rate by 1% in year one, 1% in year two, and then it goes up to the regular interest rate in year three. And then a 1-0 is where you buy down the rate by 1% in the first year and it goes back to normal the second year. So that's how a temporary buy down would work. A permanent buy down is something where you're buying down the interest rate for the whole life of the mortgage loan. A little nuance here is that the pricing is available by reaching out to our commitment desk at Lakeview Loan Servicing and seeing how much that would cost that particular day or what that, price would be. And if you would like to do a permanent buy down, it actually needs to be requested on the same day that you plan to lock the loan with TSHAC in our loan doc portal. Temporary buy downs can be done at any time, but the permanent buy downs need to be requested the same day as the lock. The way that these are paid for does need to be paid for by a third party. It cannot be paid for by the borrower. The contributors can be a builder, a seller, a lender, or other interested third party per agency allowance or loan product allowance, but we do not allow the borrower to pay for that particular buy down option. Hey, now we're going to do a quick recap about everything that we just learned about our down payment assistance and the no DPA product. So, the first reminder is that you do not need to be a first time homebuyer to use our non bond DPA or the no DPA option. The down payment assistance that we offer can come to the borrower in two forms. One is a grant, which means it's forgiven after 6 months, and the other is the 3-year deferred forgivable second lien. The 3-year deferred forgivable second lien sits there like a silent second, no interest accruing, no payments due, and is forgiven on the third anniversary. A borrower using our program can purchase anywhere in Texas, even if they're moving from out of state. So, as long as they plan to use our program to buy their primary residence in Texas, they are allowed to access our programs. Properties in targeted areas. That targeted area map that we talked about, those areas allow for someone to make more money and still qualify. It also allows for them to waive that first time homebuyer requirement that's attached to our MCC program, which you'll hear about shortly. We also offer that very competitive rate option, the no DPA option. So we wanted to remind you of that. And also, Know that all of our DPA and the no DPA options can be combined with our MCC. Again, you'll hear about all the details of that coming up. And then our non-bond program funding doesn't run out, so you don't have to worry about selling the program and then, coming to us and realizing we're out of money. That non-bond DPA just stays there. It doesn't run out of money and it doesn't have purchase price limits. So it's really reliant upon what your borrower can qualify for the mortgage loan based on their income and debt. And so now I keep alluding to the fact that you're going to hear about the mortgage credit certificate program. I'm going to pass it off to my colleague, the senior business development specialist here at TSHAC, Frank Duplashan, to tell you all about the MCC.